India's Monetary Policy Committee is set to announce its decision soon. Now, we already know that it's likely to be a status quo, both on the key lending rate as well as on the stance. In fact, all 42 economists polled by Bloomberg expect the MPC to hold the repo rate steady at 6.5%. But that's not to say that it's going to be a dull or a boring MPC. We'll watch out for whether the governor's commentary will be less hawkish. We're also closely going to be tracking what the central bank will say on key macro variables, the economy, inflation, and of course on liquidity. Now, liquidity conditions have been in focus because liquidity has been persistently tight since the last policy. So it is likely that the central bank will continue active presence in liquidity management, addressing it through measures like the variable rate reverse repo auctions. Now, inflation, of course, remains above the central bank's 4% target. In December, inflation came in at 5.69%, a 4-month high. That was because of elevated food inflation, while core inflation, that excludes food and fuel, continued to provide comfort. Going forward, the RBI does expect inflation to continue on a downward trajectory and come in closer to the target of 4%, but that's going to happen only by Q2 FY25. On the economy front, ever since the last policy, the National Statistics Office has published the first advance estimates earlier in January. Now, while these figures published are to help set the stage for the budget preparation, they did present a positive surprise. Domestic growth does look steady, though the momentum in some high-frequency indicators has been a tad more mixed recently.